Hello guys, welcome to another video. And if you're new here, make sure that you hit that subscribe button and also the bell icon so that when I make new uploads you don't miss out. So basically on this channel, if you're new, this is where I share price action content and setups, analysis and tips and stuff like that, which is related to trading. So if you are someone that is maybe new to trading, or you've been new in the game for some time but you haven't been very consistent, this is the channel for you. So let's get started. So every Sunday I try and give you at least 2 videos. So today I'm gonna give you we're gonna do Nasdaq, and then we'll see what else we can do. So let's start with our Nasdaq. Remember, we looked at this one last week. Yes, we looked at it last week, and our conclusion was something like the price. We'll get to that one. Let's start at the top for now. Remember, when you're doing analysis, we always start with the highest time frame, so that we understand how the bigger picture look like before we can go down to smaller time frames where we'll be executing, because I cannot just go to my H1 and start executing there, because now what if I'm going against something that is happening on a bigger time frame? Which is why it is important that when you're making your analysis, you just start with the highest time frame. You don't even waste time, few minutes, and then you are done. So if you are someone that likes this style of trading, you can just text me on the number on the screen. And then, because I do have mentorship, unfortunately I don't do signals, I don't play like that. I want to show you how to trade. I do not want to feed you, because the day I decide that I stop trading, it means your trading also stops. So that's why I went for what mentorship. So if you're interested, you just text me. All right, so this is what we have on monthly. Our monthly chart looks something like this. And if we were to identify the key structures on this time frame, let's start with what? With the support. All right, so the support, we will take this one here. So this is our nearest support. And then in terms of resistance, we can take, oh, sorry about that. This is our support, this is our resistance. So let's just mark them nicely so that you can see them. So it's like I said, it's important that you know how to identify these structures, so that you know where you could be, the price could be rejected and stuff like that. Because if you don't know where you are in terms of the location, you're most likely going to take trades in any direction, right? So but if you understand that the price is inside a monthly support, you know that if you are trying to sell, it's going to be very risky, because you're inside a higher time frame support, which is a key structure for a movement to the upside. So what if the price reacts from that and then starts shooting to the upside? You must always think like that. So here we can see that the price is inside the monthly support. Yes, we're saying when the price is hitting your higher time frame support, you already know that that is going to have chances of what? Of bouncing and going back up. But in this case, there are a few things that are happening that may suggest that they could be suggesting that the price could even break that. But remember, we cannot sell as yet, especially if you're trying to take that sell that will last for a couple of days, weeks, and like that. But if you're someone that just goes in today and exit today, maybe you can take a sell there. Don't make a mistake of trying to take a sell and then you hold it for too long, because the time frames that are for long term, they don't yet agree with that. And also the location, you're inside the monthly support, so that's not a good idea. So we can say that the price is inside the support, right? The support is the one that is holding, or the one that gained control. But if that gained control, we should be searching for trades to go to the upside. Yes, that is true, but there are also certain points that are working against what this. So the support obviously is trying to push the upside, but there are certain points here on this time frame that are suggesting that the price can end up doing this. So you need to wait for the price to decide where it wants to go before you can plan taking long-term trades. All right, so basically, if you are someone that is maybe let's say you are trying to sell until this support here, you first need the price to convince you that it has defeated this guy, so that the next one is fine. Even if you take a trade and hold it for a couple of days, weeks, it's fine. You don't have traffic nearby. You see, in this case, let's see who is pushing against us. Remember, it's a support. Like I said, you are there searching for trades to go long. But what about this? Remember, the zone was hit here for the first time. So now, because we're hitting it for the second time, it means it is not fresh, because it has been hit before. And when a zone is not fresh, you need to keep in mind that the first touch of a zone or a key structure is always the best, because if it's a support like this and there were buy orders there, like I already mentioned, the support being a territory of the buyers. So when you have those buy orders at that support and then you see the price bouncing from there, it means that those orders have been filled. So it has collected those orders, right? So what if when it is coming back for the second time, where we're saying the zone is not fresh, what if there are no more orders that the price can connect? collect. That's where you end up seeing the price dropping and breaking. They're trying to fetch more buy orders slightly lower than where it is now. So that's point number one. That could be, pushing the price past this support, is that the support is not fresh, right? And we just got what? This is the low. We just had a lower low. And when you have a lower low, you can even put what? A bearish trend line. So another negative thing is that this time frame is bearish and the bearish trend line is still holding, right? And one last thing, we can even say that the current candlestick, it looks like a bearish pin bar. But this one won't be an issue that much because it is formed on a monthly chart, and the month is not anywhere, it's not going to end anytime soon. So the next 10 days, 20 days before the month ends, the price can still recover and close up there. So we can't yet comment and say we are seeing a bearish pin bar on this time frame specifically, because that candlestick that you're calling a pin bar is not going to close at least for like 2 weeks. It's going to be open for like 2 weeks. So that's where you need to be careful there. So that is all that you have on your monthly chart. Let's see what you got on. So basically, this is what I teach. I show you how to make decisions based on what? Based on what you are seeing. That's why I'm not gonna encourage you to do what? To like take plug in your indicators and robots and stuff like that, because there you are selling but you don't know why you are selling. That's why if you blow your account, you're most likely gonna be frustrated when maybe you gave someone your money to trade for you and then they lost it, or you tweak their signals, they keep on losing. You're going to be frustrated. But when it's you who is doing this, executing with your own knowledge, at least you know that should it not work in my favor, I can always reflect and see where can I improve next time. You see, so that's why I opted for what? Teaching, so that I share the knowledge with you. Even when I'm not there, you can still trade on your own. You can still trade by yourself. That's what I want. So this is our weekly chart, guys. This is our weekly chart. Let's just go through. You can see today I'm using a different broker to analyze. I just want to show you that it doesn't matter what broker you use. Sometimes you hear people asking you about a broker that they can use. All I can tell you is that I'm not gonna promote any broker or anything like that. Just go for a broker that is maybe has been in the game for quite a while, and there is no like a lot of complaints against them, or even their spread is sound reasonable. You have never seen anyone saying the price was manipulated, this, that, they are regulated. You can go for that. So I'm using a different one today. As you can see how they write Nasdaq there, and it looks something like this. Candlesticks, they might be slightly different from broker to broker, but they will look more or less the same but slightly different. But that won't be a big deal. So you just have to make sure that whichever broker you decide to go with, make your decisions there. It doesn't help in you trying to get, you're using this broker A, but then when the price gets to a point where you want to get confirmation quickly and buy, you are moving to broker B, saying should maybe the candlestick this side looks different, if I get it on the other side I'll still buy. You see, you mustn't do it like that. You must just stick to one broker, and that's it. So this is what we have. At some point, I like starting from here because these things were very simple there. At some point, that was our trend line, and when we formed this area of support, this one, when you formed that area of support, that's when the price pushed up and broke the trend line, and it also broke the resistance that we had, which was up there, right? So when all of that happened, that's when you're gonna say the structure now is no longer bullish. I mean, it's no longer bearish, it's now bullish, and this was your support. Someone can also say, why don't we start it there? That's also fine. So meaning if you started it there, here, you can see that it was touched, and the price or the bulls tried to push up, and they left with a very nice candlestick in ERC, or a candlestick that has got like a bigger body, right? That is showing you aggressiveness. That is what is telling you that someone is pushing there. And then when that happened, the bulls decided, or they managed to engulf the previous candlestick. So that's when you're like, oh, the bulls looks like they are coming in. But look what the bears did. The bulls were trying to come in, but they failed to at least come here. That's very weak of them, because when you are gaining control, I expect you to gain and push in that direction, your direction, until an opposite structure is hit. That's when you can say you have done your part. But now, if the bulls are trying to come in here, but they're failing to go to at least that, that's not good for the bulls. And next week, the price came with a strong candlestick to the downside, causing another engulfing, but towards the downside. That's when you are worried, because when you're at the support, you expect the bulls to be the ones engulfing the price, meaning to be the ones that are pushing up. But when you are at the same support, but then you see the sellers being the ones that are engulfing the price, that is not good, because it means that structure might end up being taken out. So now we had that, and then the sellers came in strongly, and then that's when you're like, no, I was expecting the bulls to be strong here, so I'm not going to enter again. then you just watch, or maybe get a trade to go to the downside. And then now we created a low that is lower than this one. Because of what? We are having a lower low, then we can adjust our trend line and maybe put it somewhere there, or you can even put it here. So that is all that you're having on weekly. And one last thing about this time frame, the current candlestick that we had, or the week candlestick that we had on Friday, this one here, it has closed, and yes, it has closed, and it is what? It is a bearish rejection candlestick. And I said when you are inside the support, you expect the bulls to be the ones that are rejecting the price. But then when you have things like this, where is the sellers that are rejecting the price and they're not even at their own zone, it shows that they're still quite strong. So which is something that, you know, I've picked here to say that what we're having here might end up taking us out. Remember when you were on monthly, I said this might end up just continuing and breaking this stuff, but we're not going to trade like that until they're removed. At least we know that we don't have traffic anymore. But for now, we are still inside the support. The support is very scary because of what? It is not fresh, and we are having pin bars in the opposite direction. But other than that, the trend line is still holding. The trend is still bearish on this time frame. Let's check how it looks like on daily. You see, that's how you make your decisions. You don't have to try and switch from this broker to that broker or anything like that. Oh, last night my battery died when I was still busy with the analysis, so I couldn't even post one video. But let's continue. I know we ended on weekly, so we're gonna start from daily. So we were saying that on daily, basically the price, what it did was that when it was coming down, this was basically the area where you could put where you could put the trend line, and then the move from this guy is the one that shot up and broke this, and it even took out the trend line. And we do understand that this is the support that we just, that is responsible for that, and it is also found inside the big weekly area of support and the monthly area of support. So it is quite a very strong area of support, and it accomplished something. So that's when the price, when it was still up there, did mention that should it come back down, you are more than welcome. You are allowed basically to search for trades to go up because of the area where you are. That's why I'm always emphasizing that it's good that you know what you should be doing, but if you don't know where you should be doing that, it's pointless, because you will know that the trend is going up. You should be searching for trades to go long. But if you just search for those trades in the middle of nowhere, then it's pointless, because you're going to end up losing trades simply because you're not patient enough to wait for the price to reach the area where it has got higher chances of bouncing. That is the whole idea of knowing when to enter, so that you are saying at this area the price has got higher chances of being rejected. So now that the price is inside the very same support that we're saying it was responsible for pushing the price up and breaking the support in the trend line, and I said you can look for reasons to go long. And remember, when you're buying here, if you get a reason to buy there, you are going to target what? This guy has to be your first, just like I mentioned there, it's your first exit. Remember in the video that I posted, I also showed you that this is going to be your first exit, and then the next one can be your last exit, which is your your daily, and I think it is also found inside the weekly, because remember the weekly is here. So basically, if you're executing daily, you can use daily as your first exit, and then the higher time frame, your higher time frame in your sequence, which is going to be your weekly, can be your final TP. So you can see that when you're taking this one, you're basically testing that weekly. That's why I'm saying when you're getting to this one, it's your first, and then this is your last TP should the price go back there. No one knows what's going to happen, but we're saying based on the current structure, we have got higher chances of bouncing and going up there. But now the problem that we had, or the thing that we were worried about, was this type of a candlestick here, to say that that's a very a pin bar, a very bearish pin bar, and that could suggest that the price is going to break the key structures, which is why I'm saying when you're looking for those buy trades there at the current support, make sure that you wait for confirmation, because of not everything is smooth and pointing to the upside. As you can see here, this guy here on weekly, it is saying that we might go to the downside. But you also keep in mind that when you have a pin bar and you fail to break the range this side, it's pointless if you go and break the other side. It's like the pin bar didn't even exist. So in this case, we do have a pin bar, but it's only a matter of saying that, are we going to break it to the downside? If we do, it's more like that pin bar was a warning to say that the sellers are not done, and they still even managed to push below the range, which is going to be good for them, to say that if they pushed below that, that's more like confirmation to say now they are going to challenge the support, the weekly support. But until that happens, we have got higher chances of this bouncing to the upside. And again, when you zoom in on this time frame, you can see that we do have this candlestick, which is what formed at around midnight, or when the market opened on Sunday. So that's when you had this is bullish rejection. But remember, this is on daily, and we had the same thing on weekly, and weekly is bigger than daily, so weekly might end up pushing to the downside, but we don't know about that. And if this candlestick here pushes above that range, maybe it will be a good idea, or it will be open space for it to go until there, which means it will be breaking what the other guy did. That weekly pin bar will be basically going above it. And if we move over that weekly pin bar, is basically what I was just explaining now, saying that when you have like a bullish pin bar, and because it's suggesting that the bulls are strong, so if they break the range, that would be like confirmation to the bulls, they are very strong. But if they don't break that and the sellers still manage to break this side, it's like they're invalidating what the bulls are trying to do. So in this case, because on weekly we have a bearish one, if the bears don't convince us further by breaking that range, but rather the bulls come and go to the other side, it's like they've defeated the bulls. So if we go over that, then we won't have to worry about the pin bar that we're seeing on weekly, because it will be invalidated. So now on this time frame, like I was saying, we do have a pin bar, and the second one also is very tight, but looks like a pin bar. So basically we haven't, since the market opened, we haven't been making any progress. We've just been moving like this. I'm pretty sure even on smaller time frames we're doing that. So we're saying that we are here, and this has got higher chances of going there if we get confirmation. Yes, it can be broken. If it gets broken, it'll be like, oh shucks. So it means those guys there on weekly, these ones there on weekly, they would have continued with their momentum after giving us this pin bar. But we'll see what happens. Until that happens, we're just gonna lean towards the bulls. And because the pin bar alone, it's not something that you can take to, you can use to execute trades, especially if, remember, a pin bar, we only entertain it if it forms at the right location. So a bullish pin bar, it would make sense if it forms at a bullish zone, which is a support, and a bearish one at a resistance, because we'd be like saying the bears there, they're rejecting the price, which is what we expect in value, because that's their zone. But if you have a bearish structure at a bullish zone, the discrepancy there, you see that. So here, let's see, that's all that we have. We're just looking for anything that we can take for us to go long. Let's see what we have on H4. And then on H4, we at some point we're very bullish, and we sort of, the nearest area of let's see, we're now currently bearish, so we can use this as our nearest this is our nearest resistance, and this is the support. We have hit the support. We are getting the pin bars there around the support. So it's only a matter of whether those pin bars, they can end up breaking the range to the upside. Then they will have a chance of going until there. But remember, what is also important to note here is that the price opened with a gap. You can see it gapped there when the market opened. So maybe if we just go above even this tiny candlestick here, if we just go above that, it will be increasing the chances of us going to at least that. So that's basically all that I can say we have on our Nasdaq. So you can basically search for trades to go long for as long as you're waiting for confirmation, and don't over risk, because of what the structure on weekly could suggest that the bears are not completely out, they can still come back, you see. So for as long as we don't take out these guys here, because this is a quite interesting zone, because even on this time frame we did have this at some point, and then when we started this, we just went up, breaking all of them that were there. The areas of resistance just been broken by what the move that started by this support. So that's what I'm saying, this support, and we know it is inside the daily one, the weekly one, and the monthly one. So there's good high chances of what rejecting the price to at least somewhere around there. So in terms of how we mark these zones, that's something else. That's what I teach in the mentorship. Or also how to identify them is something that it's very important for you to understand, or be able to identify your most sensitive areas, because at least when you're taking trades, you will know which areas to be to look out for, because you don't have to, you can't just trade and say, I am in a trade, I see the bulls are pushing up strongly, and then you just relax and say they should just continue like that. Because if you do it like that, it's not gonna end well for you, because of what there are times where the steam runs out. No one is in power, can be in power forever. So here in our conclusion, we will say that you are more than welcome to search for trades to go long there. And when you're doing that, you're targeting that, because remember, this H4 resistance is located around the daily one, the weekly one. No, the weekly one is slightly up there, but this is around the daily one. So you can just exit somewhere around there. So let's see if on H1 you'll find anything. There's really nothing. Like I said, since we opened, we've just been moving to the side like that. So maybe you can use the H4 to get your trades, but if the price is to move down and break the range of that weekly, it will be very tricky now for us to search for trades to the upside. You just have to wait, because at the same time we won't have yet be able to search for trades to go short, because if you want to go short, make sure that you can't sell inside a support. So you have to break the support so that you open more space to hit before the price can move to the next one, so that you know that before it hits there, at least my buy, my sell trades, you have accumulated a lot of money. Because if you're buying inside the support, what are you targeting? Because the target is the next opposite structure, and in a case where we're inside the support, that should be the next nearest structure in terms of the support. So you see, you need to know where you are. You need to be able to identify these sensitive areas, which is what I teach. When I teach, start from the basics, connect the dots until a point where when you open the chart, nothing confuses you. You already know what to look for, because it's very, especially when you're still new to trading. I know that when you just open your chart, looking at these candlesticks, all of them they look different, this, that, so it can be very tricky for you to come up with a conclusion. But when you know you've got the right knowledge, when you know how to apply that knowledge, when you know what you're looking for, it's going to be very easy for you to just interpret what is happening here and come up with high odds setups. So that's it, guys. That's all that I wanted to share with you on Nasdaq, and I hope you'll be able to capitalize on it should it give you any entries. And if you're interested in learning this style of trading, it doesn't matter whether you're new to trading or if you've been in the game, my course will accommodate anyone. Like, I'll make sure that by the time you're done with your classes, you are able to just open the chart and tell me what is going on, because I'm going to put you on the stand. There's no way I'll let you go through the course until the end and release you without me asking you to open a chart and tell me what is going on, explain everything, because I want to make sure that by the time you're done with your classes, you can be able to articulate this stuff the same way that I do, so that even when I'm not there, you'll be able to have your own session, come up with your own trade ideas and setups and signals and trade those. That's why I don't give signals. Signals, no, that's spoon feeding. I don't want to spoon feed anyone. You don't know me. You see, you don't know me. I don't want to be friends with anyone. Now I just want to be here, give you the knowledge. You go out there, you can share it with other people, or you can use it just to empower yourself. That's what I want. That is the reason why I started this channel. I was very reluctant. I didn't want to do anything. I just wanted to just be myself and just trade. But then I was like, nah, but I'm not a bad teacher. Let me just try share the knowledge with you guys. So if you are interested, you will just come and then you will text me on the number on the screen, and then we will take it from there. Because 2022 is almost over. 2023 is here. You need to enter with a bang. You need to enter with what? With the right knowledge. You need to enter with a strategy that is not complicated. Because some people, they will say trading is very difficult. It's very not easy for us to come up with. We don't understand it, or it's very complex. But that is only the case if you don't know what you're doing. But if you just seek the knowledge, the right knowledge, and then you know that from there, application won't be much of an issue, which is what I give. To say that once you are fully empowered, you got the knowledge and you can apply it correctly, and I'm happy. I will release you because I know where you're going. You will represent me very well. All right, that's it, guys. This is all that I had for you, and happy trading week there. Sorry again for not giving you any video yesterday. My battery died. All right, guys, if you haven't subscribed, please do so. I'll see you in the next video. Thank you.